Good day, everyone. Thank you for joining me. I'm Tamara Kukshinovich, and I'm going to take you through LVMH's interim results. We feel the group is a well-positioned, high-quality counter. It has strong brand momentum in a growing industry. However, we remain cautious of any potential deterioration in the economic cycle and its potential impact on the group. We believe the share is fairly valued and would recommend a neutral exposure. The group is currently trading at a forward PE of 24.2 times, which is above its long-term average of 15.6 times and a 5-year average of 20.4 times. LVMH is a geographically diversified luxury brand retailer, which continuously shows broad-based and strong top-line growth, attractive operating margins, and robust cash generation. The balance sheet is strong, translating into a high confidence rating. The portfolio of strong leading brands allows the group a wide moat, which should produce profits well into the future. The brand moat is supported by long product cycles and iconic heritage collections, brand diversification, control over distribution, and controlled supply. Although the group's brands may face cyclical and operational ups and downs, we believe a competitor would need a lot of time and capital to create a company with the size and scope of LVMH. The fashion and leather goods division contributes approximately 60% to the business's operating profit. The brand's intangible assets are supported by the globally known Louis Vuitton brand, which is older than 100 years, with long product cycles and fully controlled distribution. This allows for full pricing control and for correcting operational mistakes faster. The division also has smaller, iconic brands. The presence of these smaller brands with high potential supports the growth prospects of the division. The recent acquisition of Christian Dior Couture diversifies the portfolio with an additional strong heritage brand. This gives further support to the moat. The wines and spirits segment accounts for approximately 14% of operating profit. This division has a high market share and brand recognition. To meet the requirements for the product title, cognacs and champagnes have limited production capacities because they need to be made in specific areas of France. However, given the size of the group's brands, it has bargaining power with suppliers. There is a barrier for new entrants because of the long inventory cycles, high demand for champagne and cognac inventory, together with constraints on supply due to land accessibility. The group's other divisions have several strong brands such as Dior and Bulgari, yet they have a smaller presence. Although the LVMH perfume brands are not market leaders, they provide a good representation in the wholesale channels. In the Chinese market, Louis Vuitton was one of the initial entrants among its luxury peers. Over-representation and saturation became a problem, but the group mitigated this by limiting store expansion and closing a few locations. On top of that, the leather goods market became more competitive and market growth slowed. The group increased the number of high-priced leather goods, innovating the space with limited editions. Additionally, it expanded its ready-to-wear and small accessory products. In terms of online sales, luxury continues to be underpenetrated relative to other segments. This is primarily because luxury retailers are reluctant to use this distribution channel. However, this is changing with companies partnering with wholesale partners as seen with Richmond using Net-a-Porter. LVMH launched the 24/7 online platform, which could improve influence on smaller fashion brands. This would further support the group's moat. In conclusion, we would recommend a neutral exposure relative to the Dow Jones Global Titans 50 Index. If you'd like to place a trade, please speak to your financial advisor or contact the dealing desk. A comprehensive investment idea on LVMH can be found on the PSG online trading platform. Before we end off, please take note of the following disclaimer. Thank you.